Hi everyone, I'm Ioannis and I'm here with a new video for you and a new indicator. This is the pair spread oscillator and it does exactly what it says. It calculates the spread between two instruments. Now, probably you know that there's instruments that usually they're moving together and they're named correlated instruments, of course, and it's a good way to benefit from this knowledge. And when you know the distance between these two, the difference between these two, you can come up with some very useful conclusions, spotting opportunities or deciding which is the stronger or the weaker among the two. This is the indicator I was talking about, and you can see here three different colors with four different lines. Let me explain to you what these lines mean. The green line that you see is the actual difference between the two instruments that we have selected. But which are these two instruments? In this case, I have S&P 500 against Nasdaq. And I have selected these two instruments because they're correlated. I'm going to use the correlation signals dashboard to check the exact correlation at the moment. S&P against Nasdaq is 98% at the moment, the correlation value. So we are talking about two correlated instruments. So as I said, the green line is the spread between these two. The difference between these two instruments is the logarithmic distance, in case you are interested in math. You can see also a purple line that it is the mean price, the mean distance. Probably it's more familiar to you as a moving average. And you can also see two red dashed lines. These red dashed lines is the standard deviation, and we have a multiplier for this. If you double click on the indicator, you can see that you can select the standard deviation multiplier, how far away from the mean price these levels, these bands will be, and of course the period, how much back are we going to look in order to make these calculations. Now, typically, when you open this indicator and you start exploring the differences between the two instruments, the first thing that you will see obviously is what is stronger and what is weaker at the moment. As you can see at the moment, weaker is the S&P that I have in this chart, and Nasdaq that I have it here is stronger. So if you are more swing trading, let's say, if you open positions and you keep them open for a long time and period, this is a useful information for you because you may want to buy the strongest at the moment. Or if you are shorting indices, you may want to short S&P 500. But we also have some other useful information that actually are actual opportunities for a day trader, and this is when the distance is pretty high, higher than the usual, and probably there is an opportunity to buy the weaker and sell the stronger. And we can see several cases here. I was looking before the video at this period here from the start, from the peak that we had here, S&P 500 being much stronger than Nasdaq, and it was the distance was pretty high. So obviously we expect this distance to close, this gap to close between these two. So a good strategy here could say that sell the stronger, that it is S&P 500, and buy the weaker, that it is Nasdaq. And you can close when we cross the MA or when we cross the other band, the lower band. I'm gonna add the lines. As I said, I took a look earlier, so we're here at the 2nd of September of 2025, in case you want to explore it with me. And we can go somewhere here, and when we clearly crossed below this red line, the standard deviation. And it is the next day, 3rd of September, again at 3 o'clock in the afternoon. And as we can see here, we had both went up, by the way, but what we care about is Nasdaq to be stronger than S&P 500. As we see here, the S&P went up for 0.84%, and if we take a look at the same period, we can see that Nasdaq has better gain at this period, 1.43% up. That means that you have an opportunity here. If you buy the weaker, and sell the stronger, you have this opportunity to be hedged, minimize the risk, because if they are gonna move, they're gonna move in the same direction, obviously, because they're highly correlated. But at the same time, you are getting advantage of this distance, the big distance, that you know that it is sooner or later is gonna be covered. So I hope you liked what you see. You can find this product on the MQL market, and I will drop the link below if you want to support me. And if you have any ideas, if you want any specific pair of instruments to check and present to you, I will be really happy. Drop a comment and follow, why not? It's free after all. And this way you support me creating more useful tools for you. Thank you very much.